How's it going, everybody? So today in this video, we're going to be talking about the break and retest strategy. I know it's a very popular strategy that a lot of people use, and especially in more choppy environments, it can yield pretty good results. So as everybody knows, if you've been watching my videos up to this point, I have a very specific way that I trade. To be honest though, that strategy, or my strategies in general, they work best in a market that is trending aggressively to the upside, aggressively to the downside, or if there is a stock that has news. So some sort of news catalyst, whether it be good news, bad news, and it's traded on elevated volume in the pre-market. So that way, when the market opens, there is a lot of volume and there is clean follow through. So my strategies work great in those specific situations. But when the market is a little bit more choppy, which it's been recently, I've noticed that the break and retest setup or strategy can work really well. And I want to go over some really good examples of those setups today. But before we get into that, I just want to talk about some of the key levels that I like to trade around. Now, whether it be the strategies that I use for stocks that have news or even the break and retest, these are the key levels that I like to focus on every single day. And I tweeted this on my Twitter. Pre-market high and low, prior day high and low, prior day close, and high of day and low of day. And I said that break and retest, consolidation, or flag patterns at these levels can be really good risk reward setups. So what I want to do now is go over some examples on the break and retest setup. Now we're going to be doing examples from this week, and this week was a pretty aggressive downside week, a lot of selling pressure. So most of the patterns that we're going to see in this video are going to be to the downside, so when shorting stocks. But just before the aggressive downside happened, there were some upside plays, some bullish setups as far as the break and retest, and I just want to go over some of those today. So first, we're going to start with a long play because I think it's going to be good to show both sides of it. So this is the SPY, and this is the SPY on October 17th. This is what it looked like coming into this day. Now, there was a big gap down on this day, but if we just look at the daily chart, and if you use this as an indication as to what way could things possibly go, we see that there was a big move off the 200 SMA on the daily chart, and then there was a pullback to some of the short-term moving averages, the 9 EMA and the 20 SMA, and we were consolidating above those short-term moving averages. We did have the gap down, so now it was just about being patient and waiting to see what way is this going to trend if there is going to be a trend. But if for some reason that gap down gets bought, we have been consolidating to the upside, at least from this recent move on the daily chart, even though, yes, the bigger term picture has been to the downside, just realizing that we have consolidated above the short-term moving averages, so maybe there could be some upside continuation. So knowing that going into the day, what happened? We had the big gap down, we had a push up into VWAP, could not hold VWAP, looked like it was going to break down. There was a failed breakdown. So I know that I'm sure a lot of people were shorting the opening range break to the downside, thinking that, hey, there could possibly be some follow through. We couldn't hold VWAP. We were trading below the 9 EMA. And then we had a very aggressive reversal. So it got back above the 9 EMA and then a strong move through VWAP. So if anybody was short, they're now off sides. And then who knows, maybe there could be a squeeze to the upside because if anybody has stuck shorting, also, the recent trend has been to the upside. Maybe there could be some follow through. And this is where I see the first clean break and retest. So a break of resistance, pull back to it, that resistance becomes support, and then there is some sort of consolidation or flag pattern at that level. So we had a nice trend higher. Yes, this was an opening range break to the upside. I'm sure that's a setup that a lot of people play. There were some flag patterns here, but as far as specifically focusing on the break and retest, this is where I see the first clean setup. So we had a pretty big push, nice sideways consolidation, and this level is going to be high of day. So I know I talked about my favorite levels to trade around. This specific setup is going to be focused on that high of day level. So what happened? We had a strong push above the 9 EMA. We pull back, we consolidate, it makes a new high of day, breaks above it, pulls back to it, and then look at what it does. It tests that level. So we had a big push through it, pulls back, starts to form a bit of a flag pattern at that level, right? Which is what you want to see. So some sort of consolidation, some sort of flag pattern, a hold of what was resistance is now becoming support right around the 9 EMA and also this 435.75 level. And then what happens? It breaks out of that flag pattern and then it does have some continuation to the upside. But that is a nice structured break and retest setup. Now here's how I see going about trading it, because I'm going to want to make sure that when I see these, I get good entries, because if you can do so, it's small risk with big reward. So here's how I want to try to play this. Wait for that break. A lot of times I would take this break, and then if I get a win out of it, it would be small, and then it pulls back. I get out flat or a small loss, and then I watch it continue to go in my favor. So what I want to make sure to do on those choppy days is be patient, let it break, let it pull back, let it retest that level. So what was resistance now becomes support, forming the bull flag at that level. And then when it breaks out of that flag, that's where I'm going to want to go long. And then I want to risk the pivot low. So let's say I was trading SPY. Say I was going long right around 436. The stop would be just below that pivot low. So 435.65. So we're talking about a very tight stop loss. Because if this does not have follow through and then it gets back below that breakout point, that's where the other side can get caught. And then those aggressive moves to the downside could happen. So that's why the risk is pretty tight here. And then what happens after? It holds the 9 EMA, it breaks out of that flag, small risk, and then look at the size of the reward after that move. And obviously it's hard to catch the entire move no matter what kind of setup you're trading. But if you just look at this, that was a really good spot, risking about 30 to 40 cents to potentially get a $2 move, which ended up being a great setup and working out really well. So that was a great example of the break and retest when it comes to the long side. Now let's focus on the other side, shorting stocks. So this is the QQQ, and this is after we kind of broke out of the range. So obviously wanting to pay attention to the direction, what happened the prior day, and then trying to go with the flow of that short-term trend, especially when there are major supports that are broken, that could be the start to a pullback. And then, when it comes to the day-to-day, just trying to focus on what happened the prior day. If there was a really aggressive downside move or a really aggressive upside move, maybe we could get some continuation of that short-term trend. This is a good example of that. So now let's talk about the levels in which we're going to trade around. So we had a pretty aggressive downside move. We're below the short-term moving averages. We broke a lot of support. So the thesis or my mindset would be, okay, maybe we get some more downside continuation, but now we just need to wait for a setup around a specific level. We're going to look at pre-market low. And pre-market low was 357.85. And we're going to use that as a level to trade around if there is a good setup. And it ended up setting up pretty well. So what happened off the open prior to even it breaking that pre-market low, which it did a little bit later, but we did not know that. So off the open, it had a pullback and then found some support. So it was below VWAP, above VWAP, little choppy off the open, no clear setup in my opinion, has a push to prior day close, double tops at prior day close, fails to move higher, knowing that the prior day there was some weakness. So if it cannot move higher and it starts to lose VWAP, lose the 9 EMA, break some technical levels, maybe there could be some downside continuation. And that's what happened. Failed to even get above prior day close, can't hold VWAP, breaking down below the 9 EMA, and then you get a pretty aggressive bearish candle. And what's it do? It breaks below pre-market low. This is sometimes where I can jump in a little too soon, but when there's choppy days or just wanting to be a little patient, wait for that break and then see if it can break and then retest and form some sort of flag pattern at that level. And if so, that's a much better risk reward setup. And that's exactly what happens. So we end up breaking that pre-market low, has a push above it, and then look at this huge wick candle showing that any buyers who jumped in, those sellers stepped in right in front of them and then brought that price back down, and it's below the 9 EMA, below the VWAP. What's it doing? It's also forming a bear flag. So you have the failed move higher. Maybe you got some people long off sides. Now they're underwater as price starts to move lower. Breaks the technical level, one of my favorite technical levels that I like to trade around, pre-market low, breaks pre-market low, has some consolidation, retests it, fails to move higher, still under the 9 EMA, and forming the bear flag. That's a quality setup. And then we get some nice follow through to the downside. Here's how I see to structure the trade. So what I would want to do, wait for this consolidation. It breaks out of the bear flag or down out of it. So if I was pretty good trying to get an entry, call it 357.60, 357.50, and then risking above that pivot high. So call it 358.20. So about a 70 cent risk. And if I wanted to be even tighter, maybe the risk would be above this pre-market low, so above some of the pivots just above it. So even call it 358. So only risking about 40 or 50 cents. And look how this plays out after the fact. So you catch people long off the open or a little bit after the open thinking that maybe we could have a bounce, fails to move higher, breaks below that pre-market low, does the break and retest. So that key technical level forms that bear flag, breaks down out of that bear flag, risking about 40 or 50 cents. And then look at the downside move you get. It goes over $3. Now, obviously, it's hard to catch the entire move, but even if you do like a 2-to-1 or a 3-to-1 risk reward, risking 40 or 50 cents to be able to get a couple bucks, that's a fantastic setup. Break and retest is a great, simple strategy. The thing with it is it requires patience, really letting it develop, which sometimes I struggle with. I can jump in some things pretty quick instead of really letting it set up, and then I get stopped out, and then it does exactly what I thought. But it just required that extra patience to be able to wait for the break, wait for the retest, let it consolidate, form that flag, and that's where those really good risk reward entries are. And these were a couple really good examples of this kind of strategy on SPY and QQQ. So that's it for the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.